Morning, Fractal Effects team. We're just following the market from the morning session. So before we get started, please make sure you read the disclosure section in the footer, the disclosure in the footer section of fractaleffects.com. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we have some divergence here where we had a mixed model buy, then we broke the low here on NAS. We took the MM to the downside, and on US 500 we took the MM to the upside, and now we're just waiting for it to come into the DSD here. So this is the low-hanging fruit. We have a clean MM into a DSD, so this thing wanted to push down initially, and this was a clean MM to the downside, and then it started pushing back up. So that would have been the happy medium where we were aiming for. Now I want to see which side gives us, which one of these assets gives us a double break. Because they both can't be right. We do have a mixed model buy for both of them. So we had a downside expansion model, but we broke the range to the upside first. So the bigger move is most likely to the upside. Today is also Thursday. Thursday retraces back to the weekly range, and the weekly range low is all the way down here, back to that daily fair value gap and previous day's low. So the simple low-hanging fruit move, that's been pretty much hit right there. Because not only is that, turn this on for a second. So not only is that the DSD low, it also happens to be the weekly range high. So this is where we could get rejection. The only clean 5M fair value gap that was presented has already been violated. So this is heading up. So whichever one of these gives us a double break, that's our directional bias. Most likely it'll be US 500. So if US 500 crosses this line right here, we'll get a bullish confirmation and we'll get a double break to the upside. That means that NAS wants to climb, and most likely take out these equal relative highs that were set in the morning. We're just going to sit back and wait. See which one of those breaks first. And if we break this low first, then that's the double break. And US 500 wants to push down to take out these lows and London lows. But it's as simple as that. We just wait now. NAS still gesticulating. It wants to go a little higher. It wants to wick right into this and touch this blue. Remember, these blue zones are where the market pushes from and pulls back to. So when you have a break, there's a 75% chance the market's going to come back up to the blue zone before it makes its next move. Same thing here. What happened? We broke the high of our manipulation move, hit the DSD high. Where did we go? All the way back to the blue zone. That's not a coincidence. As mentioned before, this is not an indicator. This is a market translator. Here comes NAS. It's drawn back to this blue zone. It wants to hit the blue zone. There's your 20 EMA, there's your DSD low, and your weekly high. Question is, does it want to push past this? And only US 500 can decide that. We want to see US 500 cross that line, give us a bullish confirmation and a double break to the upside, and then it's going to pull NAS up. Right there. Back to the blue zone. Is that a coincidence? I'll let you believe whatever you want to believe. The probability of NAS coming back to the blue zone increases when you have that kind of divergence. When this took the low and instead US 500 took the high, it only makes sense that they want to come back to the midpoint, the blue zone. That just happens to be the midpoint for both of them. That's exactly what happened. Came back to the midpoint, came back to the midpoint. There are some of our students that are just done right here, from here to here, 1 to 3. They took it on the 1 minute. When you see that kind of divergence, where's the first 1M? Be careful not to zoom in too much. Yesterday it caused a bit of an issue. There you go. They hit it, went right into the middle. Blue zone. Continuing to climb, as mentioned before, I actually want to see US 500 take the high because we do have a mixed model buy. So even though it's a mixed model, it's still a buy. But for the most part, that would have been the trade. So now that the first trade is done, the easy trade, the low-hanging fruit trade, we're still waiting for the second setup now for the spotlight. That's going to be most likely a bullish confirmation since we've already taken out the only 5-minute fair value gap right here. I'm just going to get rid of that. There's your NYC opening gap. So as soon as we cross that line, that's your double break to the upside. Most likely we'll get a bullish confirmation, and that'll pull NAS all the way up, most likely to the DSD high. "14 seconds left. I want to see a fair value gap created here as well. So we're going to have to wait for another candle to print. That'll be a great foothold to push up. 3 minutes, 26 seconds. I want to see this fair value gap stay open. And I want to see US 500 take that high. Give us a bullish confirmation. As soon as US 500 crosses this high, that divergence disappears. Right now, this thing is signaling down until it takes that high. And NAS is signaling up. So as soon as US 500 takes this high, now they're both signaling up. Doesn't mean there's not going to be a pullback, some gesticulation, consolidation, etc. Still means that the bigger move is to the upside then, because we already have a mixed model buy. That would fall in suit with everything that's happening. So as soon as this crosses here, the likelihood that we're going to go up into DSD high goes to about 75%. Two minutes, 5 seconds. I want to see this fair value gap stay open and get tapped. It's going to start drawing it out. One minute, 31 seconds left. Here comes US 500. So this is the last stronghold, this line right here. This, between this candle and this high, is what separates, that's the last stronghold for any bearish bias. Lord of the Rings, this is the last stronghold right here of the bearish, of the bears. As soon as that's crossed, could even get a bullish confirmation. We don't even need to. But that's the difference. That's the difference between a time lagging indicator and our market translator. Yesterday, we quickly took a look at GBP USD. I told you in 10 seconds that market was going to go up, and it did. Said it was going to come back, have a retracement back to the blue zone, and go. It wasn't a market I was interested in, but that's exactly what happened. You can check it out on GBP USD. You can watch our previous day's video. You should be able to look at a chart using our market translator, and within 10 seconds, 10 to 15 seconds, know the exact bias, the directional bias for the day. That's it. It just has to cross this line right here, and there is no more bearish bias. Last stronghold of the bears right here. So if it crosses that, then we're looking for an entry right there. Could come back and sweep, but we want to see the candles close inside this fair value gap. Now let's just hope it doesn't take off without us. A little bit higher, just got to cross here. As soon as it crosses that line, I don't have a bearish bias anymore. Doesn't mean there's not going to be a retracement, and again, some gesticulation. It just means that our bias is now bullish. I cannot sell this market, and I'm looking for an entry to go long right into the DSD high for NAS. This is the CFD contract, so that's that point right there. The midpoint is 23,289. But it works across all asset pairs. You could be trading futures. You could even do options trading, to be completely honest. Again, still waiting for it to cross here. And then that's the point of interest right now, the fair value gap of interest. In the most random scenario, if this drops from here and NAS drops and takes out this low, then again, all of a sudden our bias changes. But we don't make a move until we have a bias. Capital preservation, first goal. With any other strategy, you'd be sitting there biting your nails. Maybe you entered a trade, maybe you're going the wrong way, who knows. With this, you do not even make a move until you know for a fact that the market wants to go in one direction over the other. Just got to clear this on US 500. And at the same time, we want to tap this 5M fair value gap. And that's our foothold up. Just taking his sweet time. This could be it. Sometimes you just get one quick little wick up. That's all it takes, by the way, just a wick. Wick counts. I don't need the candle body to close over this. As soon as it wicks this, that's a double break to the upside. We're green across the board. Most likely that might even give us our bullish confirmation. Then you cannot sell this market. And the question becomes, are you going to get a good entry or not? Still looking for your 1 to 3 risk to reward. I'd like to enter here. Stops down here. For a 3. Somewhere roughly around there. Like I said, even though I know it's going to go up into the DST high, it doesn't mean I'm going to get greedy. I'm aiming for the low-hanging fruit, and there's your cross. Now I just need an entry. Just going to check, actually. The high of this candle, you can see right up in the top there, is 3742. 3742. Okay, so it's actually, hold on, we still need another pip. It has to be a full break, can't just be the exact same height. Six seconds, there you go. And there's your bullish confirmation. Now I just needed to come into here. That's my entry. But I cannot sell this market now. Again, the question is it going to come back here, or is it going to create another fair value gap and just keep pushing up? We don't know. But this is the foothold. That's your 1 to 3. And even our stop loss here is speculative until it comes back into here. Ideally, whatever happens here, whatever the wick is, that's going to be our stop loss. I'm just projecting it right now just to kind of get an idea. But that would be the goal. Always paint it out, always know exactly where your 1 to 3 is, where your 1 to 2 is, because as soon as you hit 2R, we're going to roll the stops, we're going to take some off the table, you're in a safe trade. Then you can set your TP and go hit the gym, do whatever you want to do for the morning. There's only one of two things that could happen now. We either come back into this zone for an entry. It could dip even lower than this, but again, we're looking for an entry to go long, or it could continue to take off without us and maybe create a fair value gap up here, which would screw up our 1 to 3 possibly. Because as soon as we get a confirmation, what happens? There's a 75% chance that we're going to retrace back into the range and then get that extension. Where are we going to retrace back to? Usually the 20 EMA. But since we've already done an early retracement to the 20 EMA right here, it could just come into any fair value gap. Right now, this is the only one that's being formed. It could even take, wick the DSD high and then continue up. But that would be the, again, optimal entry right here. Now let's just wait. As it stands, this is the only fair value gap that's been created. So until it creates another one, it wants to come back into here. Two minutes, 2 seconds left on this particular candle. So we already had a mixed model buy. Now we have a bullish confirmation, a double break to the upside. There's over an 80% chance that this now wants to sweep these highs. NAS wants to sweep out these highs, equal relative highs here. And here's another hint. You know, when you hear people talking about equal relative highs, sometimes you see people just taking any wick. Oh, there's a wick, that's a wick, that's a wick, that's a wick. A true equal relative high should look like this. There should be a slope down. That means this is the highest point. These are called failure swings. The market wants to take out failure swings. If all of a sudden these wicks were higher than this one, that's not a true equal relative high. You already swept out the high here. It came up and it swept out these highs, and then it dropped. A true equal relative high should have a slope like that, where this is still the high, it hasn't been taken out. These are failure swings. Make sure you write that down. Understand the lingo. Understand the patterns. Now, are you going to let us in, or are you going to keep going? Never chase the market. Always wait for it to come to you. After a confirmation, there is a retracement. Come on down. This is the only 5M fair value gap so far. This has been an entire week without any high impact news other than today. We had a high impact news at 8:30 and I believe at 9:45. We also have to proceed with caution given the fact that we are at all-time highs. US 500 is at all-time highs. So when you're at all-time highs and you've already hit and gone over the DSD high, one could be like, well, where is it going to stop? How high is it going to go? Well, that's why I'm not interested in US 500 since it's at all-time highs. I don't know where it's going to go. All I know is this has not yet cleared out these equal relative highs. So this is my primary focus. Still no entry, still just pushing up. And again, if it keeps pushing up, then that's a runaway market. It didn't tag us in. We got that early play from here back to the blue zone. And I was hoping to get a tap in here to go long. Let's see. Even US 500 has not done a true retracement back into our range. That's not a retracement. We're still outside the range. Remember, 85% chance that we're going to retrace back into our range. And this is the only fair value gap that's been left open. So it has to come back into here. And right now, Nas is on a bit of a tear, but I'd like to see it come back in here and tap us in. We still got time, 3 minutes till 11. And if it just keeps going and takes out these highs, then never tapped us in. Can't feel bad about that. This is the difference between a professional trader and somebody like a retail trader who's just getting FOMO. They're like, it's going, it's going, it's going to hit. I got to get in. Guess when they're going to possibly pull that retracement? Right here. For all those people that jack up their lot size and say, you know what, let me take out these highs. Even though it's the tiniest move, if I jack up my lot size, that'll account for something. And then that's when they drop it, because this is psychology and reverse psychology happening at the same time. Said it a million times, you're not in finance, you're in psychology. That's what this is. Still just patiently waiting. Make sure you guys are checking out the Market Watch section of Fractal Effects. We hired an entire team to go interview analysts, figure out their projections for stocks. Remember, we're not allowed to give financial advice. That's why it's coming out of the mouths of experts. But it's all in our Market Watch. It's all included in your package. Instead of paying $12, $15 a month for Bloomberg or Reuters, we've included it. Still no retracement. Looks like we might be creating another fair value gap in here. But this is where I'm still interested. I want to see them drop it all the way. Makes sense from here. And we still got a lot of time. We got 30 minutes to find a high probability trade setup. Don't put too much clout in this. Again, there's going to be a retracement. when they leave this string of fair value gaps, it's a perfect opportunity for them to just drop at one time. Could even be a big candle too. Big displacement candle wicked all the way down to scare the hell out of everybody to thinking that this is going to go down. Look at US 500 just on a tear. No real retracement yet though. This is the only fair value gap that was created, has not been tapped. If it just keeps going and we hit the DSD high before that retracement, I'm not interested. I'm done for the day. That was the low, not even the low hanging fruit, sorry, that was the tree top. So if we hit the tree top before we get any real retracement, not interested. But it's this simple. This is how quickly you can take a look at a market and just translate exactly what it's trying to tell you. We know the directional bias. We know the targets. We know the stops. Just got to remain patient. That's a big wick. That might signal our retracement, most likely to this fair value gap and the 20 EMA. That's what we'd like to see. And hopefully they use this opportunity to drop NAS. Now they've left another fair value gap here, so I got to mark that out, but ideally I still want it to come all the way down here. That's the first presented fair value gap on the rise up. So if they hit this now, they don't have to come back later. I'd like to see just one big displacement candle, just to rattle all these people who got in here with FOMO. I just want to see one big one, rattle them, they jump out of their positions, and we look for an entry here. That's the goal. I don't chase the market. If it comes to us, it comes to us. So it's losing steam here. "23 minutes left in our stream." It's going to let us in or not? Still just gesticulating. This is a great place for them to drop it. Again, all the people who got FOMO that jumped in right here without a foothold, hoping to take out these equal relative highs. This would be a great place to just rattle them, drop it, come back up. We might be able to get even more than a 1 to 3. So then I would aim for this. It's the lowest point of these equal relative highs. And depending on where that wick ends, that's where my stop loss would be. I'm not saying it can't just tap here and continue up. It could. But I'd like to see it from down here. That's a better trade. Just waiting. So we already had one successful trade from here to the midpoint. But I want to get a nice foothold entrance, take it up into these highs. And like I said, could it go all the way up to here? Most likely it will, but that's getting greedy. 1 to 3. There's a reason why I don't invest in penny stocks, because there's no proven historical record. They don't have enough earnings reports that show you that this is a stable stock. Their beta rating might be high. Stick to the blue chips, the ones that have proven themselves. Same thing here. Stick to the low-hanging fruit, the 1 to 3. Don't get greedy. I think most people get caught up in seeing some of these flashy traders with the nice cars and this and that, whatever. I'm telling you right now, you could be a successful trader just sticking to the rules. And sometimes trying to squeeze out that extra little bit usually leads to more of a failure than anything else. So there is a volume imbalance in here as well. You can include that. But I still want to see some kind of reaction down here. I want to see if it comes back and wicks the 50. Like a shallow, tiny little tick and runoff, I'm not interested in that either. US 500 still has not come back to this 5M fair value gap. There goes NAS. And again, if it takes out these highs, that's fine. And just barely ticked it right here. I'm not interested in that. Not the way they left this open and they left this open. No. Nothing to be had here. I want it from down here. When they leave this first fair value gap open, this first presented fair value gap, they can sometimes run it back into it. Let's see if it comes back around. And we've been here many times before, and I've told you that just because I know which direction it's going and what the targets are doesn't mean that it's going to tap me in, doesn't mean that it's going to give me the entry I want. I'm not going to chase this. What's the percentage chance that it's going to take out these highs? 75. Like probably closer to 80. What's the chance that it's going to come up into here? 70. But without a foothold, without an entrance, without a proper 1 to 3 risk to reward, what does it matter? Just because you know where a train's going doesn't mean you can just jump on board. You gotta get on at a station, right? You're not gonna jump onto a bullet train. So we're coming back into this fair value gap, US 500 coming back into this fair value gap. I almost want to see it push through and wick the DSD high for US 500. For NAS, I'd actually like to see just a massive displacement drop right into this fair value gap. As mentioned before, when they leave this fair value gap open, this is the first fair value gap presented after the MM, after the clean MM down. That means it can come back at 130, come back at 130 and come and wick it. It becomes the draw on liquidity after 130, unless you have a runaway market, which I don't think we're going to have today. I think we're just going to take out these highs, pop here, and probably drop back into this area. 12 minutes left. Let's see if we can't come all the way back into the blue zone and wick this. Not that interested from here. That would be your stop loss down here. And you can still squeak out at 1 to 3 for sure. But I want to see it at least come in here and wick. Sadly, when you have this set up, again, it could go all the way down here. That would drop it to a 1.59. Just proceed with caution. Let's see what happens here. Remember, hit a fair value gap, create a fair value gap. Let's see if it comes back in and gives us a 1M fair value gap. I want to see across that midpoint. Look at both of these, still have not touched that fair value gap. Ignore all this gesticulation. Still just waiting. Again, it's pushing without having touched anything, without having come into the zone itself, so still not interested here. What we are getting is consolidation. Power of 3, consolidation, manipulation, distribution. So if this candle stays within this range, that'll signal a bigger drop. Consolidation usually leads to just a continuation. Just going to change the color. Rarely will you see consolidation this close to equal relative highs or lows. that didn't eventually just push up, but not before a drop. Doesn't always have to come, but US 500 still has not touched that fair value gap. 7 minutes left. This could just be one of these slow crawls. Still not giving us a proper entry. We finally got a proper crossover. 20 EMA over the 50. Now we're green across the board. If the market wicks here, touches the 20 EMA, that could be a decent entry to take all the way into the DSD high. We only got 4 minutes left in our stream, so that would be the setup. Otherwise, like I said, the market continues to drop, and this becomes the point of interest, with equal relative highs being your target. So even if you know the directional bias, even if you set it up perfectly, doesn't mean you're always going to get an entry. And you want to make sure you get it in the window of opportunity. Yeah, from down here, that makes sense. If you get a wick and then a green candle closing over, remember, hit a fair value gap, create a fair value gap, tap it. So this is our last candle. Please make sure you check us out on fractaleffects.com, where we teach high probability trading. Please hit the subscribe button, turn on your notifications so you know when we're live. We're live currently Tuesday, Wednesdays, and Thursdays. And also check us out on the social medias. We're always uploading educational material, fractal.effects with an E and an S. We'll still watch this last candle play out. Let's see if it dips in and touches those EMAs. So it's coming back down. "29 seconds. Let's see if it cuts right through, hits that. And that's our time. As mentioned before, if it dips down here, wicks the 20 EMA, bounces off this fair value gap, and you see another smaller fair value gap on a 1M, could take that into the DST high, or it could dip all the way down in here and then head up from there. Those are the 2 points of interest, and that's our time. So have a great rest of the day and the week. We'll see you guys next week.